Hello, and welcome to Virtual Investor Conferences. My name is Matt Loteplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Corero Network Security PLC. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Carl Herberger, Chief Executive Officer, and Phil Richards, Chief Financial Officer of Corero Network Security PLC, which trades on the OTCQB venture market under the symbol DDOSF and on the AIM market under the symbol CNS. Welcome, Carl and Phil.
Thanks, Matt. Good morning, good day to everybody out there in the investor land. This is Corero PLC's overview of our company, and I'm Carl Herberger, the CEO. I'm looking forward to actually having a conversation with Phil. With that, let's first give you an idea of what we do and what kind of market and what kind of problems we're solving in the marketplace. Corero Network Security is a security company focused on the problem of service availability that would take a company down from a cyber attack. Often this is a acronym called DDoS, because DDoS is the most prevalent attack type in that attack vector. We come to market with software and some hardware. We manufacture innovation to be able to solve these problems and have been doing this for the last 10 years. We drive a platform and a series of solutions and services that will solve this problem resolutely no matter where you are. And we do this largely these days through a managed service or recurring service model, but have the ability to actually ship software and hardware in a capital market. We have headquarters in London, and we have our Center of Innovation and Engineering out of Edinburgh in the UK, and our sales, marketing, and operations centered outside of Boston in the US. As was mentioned, we're listed on the AIM and on the OTCQB. Next slide, Phil. All yours.
So it's a little bit late now because we're in June, but this is our year end is published at the end of 31st of December. So this is looking at the full year 2023. However, what we did last year seems to be dwarfed by what we've already achieved this year. So, I think the main achievements to look for last year was actually we secured a strategic alliance with Akamai, who are one of the biggest tech names globally. And this was an absolutely phenomenal relationship for us to sign. We both sell to them, we sell through them, and this has really given us scalability when it comes to sales, because Akamai can go into markets, into jurisdictions, and target customers that we could never have targeted before. And that was a really strong achievement, and we're already seeing that bearing fruit now. We signed a couple of deals towards the end of last year with them, and we have a very, very strong pipeline going into 2024 with Akamai as well. We brought Carl on board. We spent a long time looking for the perfect CEO for our company. Carl comes with a great history in this sector, having built up one of our main competitor, Radware's products from the ground upwards to an over $250 million market within Radware and building up their security portfolio. And Carl can talk a little bit more to that. And that has given us a real insight into, more in depth how our competitors think, how we can attack that, how we look at the renewals, and really revolutionized our strategy when it comes to go-to-market. We launched SmartWall 1 as our new platform last year. We also released the product update 12.0. We secured a $1 million deal with a new channel partner called Tech Enabler. However, as I said, this has already been dwarfed by some of the deals we've already signed in 2024. So what was a very impressive deal in 2023 suddenly seems a little less impressive when you look at the deals we've already released and announced on the market in 2024. And we've continued to grow our DDPS service. So that's our SaaS-based service. And we call it DDoS Protection as a Service. So if we look at the business in numbers quickly, this is a snapshot from last year. So we had 22.3 million revenue. That was up 11% year on year. Our adjusted EBITDA was 2.2 million, up nearly 30% year on year. And all we do is adjust out for FX on an intercompany loan. That's the only thing we adjust out for on the EBITDA number. And that FX volatility will go away this year because that intercompany loan is no longer there. We had 16.9 million ARR, which was up 17% year on year. And there's a slide a little later on to show you our ARR growth story, but the CAGR over the last 5 years has been over 25% growth year on ARR. And this is a key metric for us and one that we are extremely proud of how that's grown. We have extremely high gross margins at 90%. We provide fundamentally a software solution to our customers. Yes, there is an element of hardware, but that is not a significant component of our sales, hence the high gross margins. We have very high customer renewal rate at 97%, and actually our NRR will be well over 100%, and that's a metric we're looking at measuring and releasing going forwards as well. We have about 80 people worldwide, as Carl mentioned, mainly in Scotland, in Edinburgh, in Marlborough, in Massachusetts, and London, and then dotted around. We are busy building up our sales force with the help of Carl and some of his connections, moving into LATAM, Asia, looking at supporting the Middle East, etc. And we have a significant global footprint. And one number that's not on here that I'll talk a bit about later on is that we generated just shy of $1 million worth of cash last year. We ended the year with $5.2 million in the bank, and that pile is ever growing. We have no debt. We paid down all of our debt last year. So we're not only cash generative, we're also debt free and looking to add to that substantial pile of cash, which is a real positive for us. And that was a real milestone for us in 2023. Carl.
So what we have here is a business in a market that is very large, but our business is nascent in that marketplace. The marketplace is dominated by essentially two innovative companies that have approximately each 30 share, and they've been in the marketplace for 10 to 15 years. We have a business that has been making a market and has about $22 million worth of revenue and has a lot of opportunity to actually address the current market that's out there. Our strategy is to go after the renewals of our competitors. That is about $500 million a year that refreshes per year, and be able to provide a solution that's both technically disruptive and attractive on numerous sets of fronts. One is attractive on the reduction in complexity and the reduction of OpEx, so the need to actually have a lot of knowledge to be able to run the tool, but most importantly, to address the resulting cost with the solution actually achieves approximately 50% reduction in cost for the customer as a result of less capital, less devices, and less solutions needing to be deployed in an environment. So we are essentially a challenging brand. The investment case here is for a company to address innovatively, technically, a cybersecurity threat with next generation capability against two large incumbent providers that have failed to innovate in this space and have strong inhibitors to being able to address the space in the way that we address it. And having come on over from one of the competition, it's one of those areas where I know very, very well the capabilities of the competitors and know how to think about the buyer very nicely. We have an experienced management team installed for approximately 10 years in most seats. And we have very strong R&D investment, and we're propelling ourselves into new products and services as we move forward over the next 18 months with a renewed and revigor on our innovation schedule. And we have started to develop a very strong capability internationally for channel partners and many newer and many onboarded new alliance partners that help us build our pipe and funnel. Next slide. The problem of DDoS, or cyber attacks to available solutions, is a problem that will not go away so long as there are systems that must be up and available that are technical, and there are people that want to take those systems down. And then generally speaking, it's a human trait to want to perpetrate attacks for various reasons, crime and otherwise. And one of the ways that these problems evolve is as technology evolves, the problem follows it. Often technology is not written or designed, implemented, or rolled out when it first comes to market, with a tremendous amount of resiliency or protection on it for availability-based attacks, or the ability to actually deny an attack so that the system doesn't go down. And one of the ways that perpetrators have begun the process of actually making money on DDoS attacks is by building botnets that can be used and sold like a tool, like a game, for people that want to actually perpetrate an attack. And in those scenarios, here's 3 great examples of botnets that can be purchased or can be used for different techniques to be able to actually perpetrate harm. Mirai is a Chinese menu botnet that you need to know almost nothing about DDoS or technology at all to be able to perpetrate an attack if you actually rent or own the botnet for a period of time. BrickerBot is another concept in botnets where this botnet is focused at actually attacking the infrastructure of your devices and bricking them, quote unquote, which means to have them denied the ability to be turned back on again. So essentially brick them. You have to replace the hardware. Hajime is a little bit of a visibility in what will come. Hajime is purported to be the largest botnet in the world, growing every single day. Millions of enslaved devices. The people who have their devices enslaved don't even realize they have enslaved devices. And the weirdest piece about Hajime is that that platform has yet to be actually used in a botnet. So people are wondering what will eventually be the attack type and who will be the perpetrator. But those are examples of it. What is a DDoS attack or a cyber attack to availability? It's essentially akin to the same thing that we experience on a daily basis in our daily lives when we try to join a highway and there's too many cars for too few lanes, or we try to get on a train and there are too many people for the car that we're trying to enter. It's essentially resource exhaustion attack, but it results in a denial of a service, denial of a capability. And of course, in today's world, in many, many businesses, maybe most, a second or a minute directly correlates to revenue or capability. So the attack type, technically speaking, can attack a rule or a law that governs internet or transaction-based communications. It can be a misallocation of resources, processors, storage, the way that the device has been allocated or designed architecturally, or it could be this, that the underlying infrastructure is so weak or so old or so nascent that it's fragile on and it's susceptible to an attack. So that's essentially the way a DDoS attack works. For a company, a cyber company, to be able to deal with that, they have to deal with the idea of knowing how to detect it and how to mitigate it inside of seconds. Normally inside of 60 seconds, detect and mitigate, but often even inside of a second itself, because after all, the nature of the attack is availability. So the capability of the provider of innovation needs to be great. Our technology does what all other vendors do out there, and we offer additional capabilities that are meaningful to the customer. So we provide the capability for managed service providers to be able to provide filters and filtration systems. And our business is very similar to a filtering system where you have municipality water filters. We provide DDoS filters for large service providers like internet applications, hybrid cloud, hyperscaled cloud service providers, and so forth. But that also there's needs for premise-based or tap-based filtration systems, much like your water, in that each company has often an incremental need to continue to filter their internet and their service through incremental premise-based filters. So we do both of those things, and so does everybody else. But we do something else that's different. We offer also the ability for these all companies to have filter and route of the internet or the service in their pipe or their network. You can think of it as the water we have the ability to detect the problem in the conduit, and we can actually solve the problem in the conduit. And we can do this at such scale and such speed that you often don't even need filtration, either in the municipality or at the tap. We can do it in the conduit. And therein lies the secret sauce and the capability of Corero. Next slide. We go to market in many different ways, but over the years now, we've been able to develop channel partners that have decided to make Corero the top of their line card for this problem. And we've specifically run out our channel partnerships to make sure that we have coverage worldwide. And this has been helping us actually see, hear, and understand capabilities and prospects throughout the world. So we have a direct selling force that does channels sell through sales. And then we have an alliance channel with Akamai, Juniper, and GTT that their sales force, independent of ours, sells our solution set. So those two ways are the fundamental ways in which we generate net new business to the company. Next slide.
Thanks, Carl. So if I look through the numbers in a little bit more detail, just go through where we've been over the last 5 years so you can see the journey. So as I mentioned, a lot of these numbers before, but just so you can see the growth from year on year, and particularly for us, ARR is the absolute key metric to look at, and the steady growth year on year on that. Our net cash position at 5.2 million, as I said, is completely debt-free. We're cash generative last year. And that is something we're going to look to continue adding on to our cash balance. And some of it we use for reinvestment, and some of it we will use to just generate a return on the cash as well. And we anticipate margins staying up as high as they are because we're moving ever more into software-only business, with the hardware being a very small proportion of our sales. But if we look at then the capital structure and where we're at the moment, so we have a market cap of around about £75 million as of today, maybe a little bit higher, which is, will be around about $100 million as we sit here today. We have 508 million shares outstanding. We have options as well, but we have no warrants, RSUs, or convertible notes. And our share price is currently trading at its all-time high, I think, at 15p. We have a very diverse investor portfolio with good liquidity. We also have a decent amount of insider holding. Our chairman owns 37% of the company. And below that, we have a mix of institutional investors, retail investors, and other large shareholders as well. So our key metrics, the ones that we measure ourselves by, as I've said before, it's ARR and looking at the CAGR of just shy of 25% on that over the last 5 years. Revenue increase, profitable, cash generative, debt free, with a very strong cash balance we're only adding to. And these are the things that really matter to us. And for us, the aim is to then move towards the rule of 40, which is really important for us to make sure that we are generating significant revenue growth, but also increasing our margins as well. So making sure that operating margin is hitting those double-digit levels whilst revenue growth continues to outpace the market. So where do we make our sales? What's the geographical split here, and what's the product split? So we're mainly US sales. So we've got about just over 70% of our sales are made in the US, which is the most competitive market in the world for us. So for us, that's a really key, appreciation of the product. And if we can be really successful in that market, then that means we can replicate that everywhere else, and we can therefore build that strategy and move it out to the rest of the world. We have, if you look at the revenue by category, we're roughly split between this DDPS, so DDoS Protection as a Service, so the SaaS-based business. We have term licenses, which are one upfront revenue, and then we have support and maintenance. And if you look at the DDPS and the support maintenance, that's what comprises our ARR. And then you've got the term licenses, which are, as I say, the more, that's revenue upfront for us as well. So, Carl, do you want to take us through the strategy and the outlook?
Yeah, so we have recently changed much of the execution strategy of the business. This investment thesis for the company is really about an execution strategy. We have had the product. We are going to innovate and continue to innovate on the product, but a lot of this is about making sure that we have our revenue pursuits well tended, well heeled, and well executed. So we have broken up our revenue pursuits into 4 revenue models from which we actually generate revenue, but differently. We have different buyers. We have different ways in which we actually support it with marketing and selling activities. And we often even have different support models within them. So we've broken those up, which we previously haven't done. We put more management and capability and visibility on top of it, and have actually driven a lot of KPIs on top of that. And that's what you see here in this slide, is that we had these 4-generation revenue pursuits. We did that earlier in the year. I'd like to think I'm quite happy with the way that this is working and how it's given us great capability. So moving into that, how does 2024 look, given we've been reporting largely on 2023 public numbers? What we've talked to the street already and made publicly available is a whole host of new business that has come to the company, which we have publicly communicated over $9 million of net new bookings already through 2024. And you can read it here in the slide. We've done some takeouts, which has been a big strategy for us, is to go after the duopoly that's in the marketplace and actually go to the renewals of those companies and make a proposition there that we think is quite compelling. We've also been expanding current customers and expanding contract renewal times, and we've been doing geographic expansion. We now have presence in APAC, in Latin America. We're placing presence in the Middle East, and we see tremendous demand, in fact, even increasing, especially in some geographies which were not typical. And a lot of it has to do with geopolitics. Elections and these kinds of things, which are happening all around the world, are a net benefit to our business. Next slide.
So now we're on to the Q&A, Carl. So
Yep.
Tommy, we'd just like to introduce Tommy from Harbour Access, who will be moderating the Q&A. Tommy, would you like to start reading out some of the questions that we can take?
Yep. First question, can you guys talk about your strategy around targeting new clients?
Yeah, sure. I'll handle that. So new clients, we have two strategies. The first strategy is our direct sales force. And this year, our direct sales force largest strategy is to go after contract renewals. There's about $500 million per year that renews between various vendors that have existing business in this space in the marketplace worldwide. And we have very dedicated programs to know how to find those renewals, know how to argue our case for being part of the procurement process for the renewals, and then to win those deals over from the new clients. That's a large part of our strategy. It has been already bearing quite a bit of new fruit. I think you can tell if there's $500 million worth of renewals. If we can just win a small percentage of those renewals, it will provide for lots of growth for us for the foreseeable future. Phil?
No, absolutely. I echo what you said. I mean, I think we've got this targeting of renewals is a very new strategy for us, but it's already paying dividends with the contracts we've signed earlier on in the year. So there's a lot more low hanging and medium hanging fruit there. Tommy, next question.
To follow up on that, are you guys looking to expand your current relationships?
Yes, so on the net new relationships, the direct selling, what we go to market largely is with channel partners, and we have already announced a number of channel partners. In our RNSs, we've announced increased channel partnerships in Italy with Ingacom, for example. We earlier in the year talked about Tech Enabler out of Brazil, and you should expect to see more channel partners with more coverage for us out there. In addition, with the alliance partnerships, these are selling through Akamai, Juniper, and GTT. You should expect to see more alliance partnerships, and you should also expect to see more acceleration of the current alliance partnerships we have in terms of execution success. So that's a large focus. In the back half of the year, we believe we'll see an acceleration of that. I think there's good early sprouts and good showings of promise throughout the first half of this year. But the back half of the year, I think, will bear a lot of better fruit. Tommy?
So what is your SaaS revenue model, and then what does the total addressable market look like?
So today,
So
go ahead, Phil.
no, I was just going to say, because I think there's a third part of this. We've just got 5 minutes, so we'll try and whiz through it. And it was, how can we grow the spend with our current clients? So today we think the market's worth about $4 billion, of which we're going to, we can chase after about $2 billion worth of that. Our SaaS model is one where effectively, people will buy our product as a service over typically a 3-year period. And for example, the relationship with Akamai is a key one for that. So everything we sell through Akamai will be as part of our DDPS as a service, so DDoS protection as a service. But we're very much agnostic whether it goes through the SaaS model or whether what we call a CapEx model. It totally depends on what the customers want at the end of the day. And how can we grow our spend with our current clients? Well, this is something we're actively looking into, and one of Carl's big ticket items that he's been working on is what we can sell additionally to our clients. So we launched in February an intelligence service that we can sell as an additional product, but we also can upsell because our clients grow as we grow. So they need more bandwidth, more support. They have more points of presence. They have significant more footprint, and we can grow with them as well and upsell. And also price increases for sure is something that we always look to bake in.
Very nice. I guess we have time for at least maybe one more, maybe two more.
Can you discuss your IP portfolio and what do you see as your growth drivers?
Yeah, so some of the most significant reasons why people buy Corero is it's incredibly less complex. We're a software-based company that's independent of hardware. We'll give you hardware if you need it or want it, but you can procure your own hardware, and that's the only vendor in the marketplace that will give you hardware independence, and that gives you extensibility into the next generation hyper-scaled business models, which is what people really want. We provide that in the marketplace. Second, we'll manage your solution for you turnkey. That means on-premise, or we will manage a business that you might be building with this capability. Nobody else does that. No vendor provides full management solutions over a premise-based technology in this space. The third reason is we offer managed services providers of all types. That includes internet service providers, managed security service providers, application security providers, infrastructural service providers. We provide them all with a revenue opportunity. And we do this in many different ways. Some of it is pure revenue share, whereby we can provide ownership ourselves and retain ownership of the technology and manage your solution for you for a larger share of the revenue. So this is highly attractive to most companies. And then, the fourth part is that we're an incredibly responsive organization with a first call ownership of all customer support calls. But we have such high customer retention because we have such high quality products that our customer retention calls are extremely low. So the customer satisfaction rates are very, very high. And the fourth reason why people really come and turn to Corero is because, frankly, the other two providers in the marketplace are old in the tooth in both their business models, their technology, and their cost structures. So we result often in at least half the price of what's out there in the marketplace today. Tommy?
Awesome. And then are there any plans to do a reverse stock split?
We're always looking at ways of increasing stockholder value. I can promise you we've investigated 4 or 5 different concepts and constructs that are out there, and we're always looking to make sure that the market capitalization is appropriate for the business fundamentals that are there. And I think you should expect to see different concepts as we grow our cash position in trying to leverage better value for the shareholder. Phil?
Carl, I think we're out. That's absolutely right. I think we're out of time now because I think we're hitting the 30 minutes. So thank you. Thanks, Tommy, for moderating. Appreciate that. And thank you, everyone, for listening. Carl, anything?
Nope. Thank you very, very much. And we look forward to having and answering any questions following this if anybody's interested.